Hello traders, welcome to Investoo.com's flash course on how to correctly position your stop losses. In this lesson, we are going to show you how to correctly position them, and you are going to be using the market structure to do so. And we are going to go again to our same two trades, the one on the US dollar, Canadian dollar, where we used our stop loss, and the one on the GBPUSD where we didn't. And we are going to show you where your stop should have gone on this trade. But first of all, let's take a look at the US dollar, Canadian dollar. Now, when you are looking at, or when you're looking to take a trade, you always have to think about it this way. Where is the level that invalidates my trade idea? If I'm going long, or in this case, if I'm going short, where is the level that price has to hit that invalidates my idea? And the answer is pretty easy. If you are going short on the top of an up move, if price keeps making higher highs and higher lows, well, you might be wrong on the reversal. So in this case, if price makes a new high, then you need to get out of the trade. But where are we going to place this stop loss? Well, that's easy. We are going to be placing it above the previous high. If you are short on an up move, you are going to place your stops above the previous high. If we go to the 4-hour charts, you can see that we also hit an area of resistance. Okay, now not only we are going to see not only we are going to look to place our stops above the previous high, because if price keeps making new highs, well, the upswing or the up move hasn't ended just yet, and we need to get out of our short position. But we also need to place it above this area of resistance, and we are going to take the actual highs of the moves. We got a high here, and we got a high right here. So right above this zone is where we need to place our stop loss. And the reason we need to place our stop loss above that zone is because, one, not only will we be making a new high, but we also have rejected this zone with the previous candle. Okay, you can see this rejection candle, or this bullish rejection candle at the top of the move. And not only that, but if we break with this area, then we would be breaking with a very strong area that has been tested twice already. So you have to know how to read the market in order to place your stop loss. You're not going to blindly place your stop loss 20 pips above your entry level. And in this case, the logical place to place your stop loss is above the previous high when we took our trade. And you can see that we took our trade, and then price made a lower low, a lower high, then a new low, a lower low, and is currently making lower lows. So that was the correct place to place our stop loss on this US dollar, Canadian dollar. If we go to the GBPUSD, where would our stop loss should have gone? Now, most of you would say that our stop loss should have gone above the previous high, and that is not wrong. You can place your stops above the previous high right here. Okay, this red dotted line will be our stop loss. But what happens if price comes back and tests the high of the move? This would mean that you would have placed your stop loss below the previous area of resistance. And when we are in a move, or a very strong move to the upside, and we are trying to play the bounce of an area of resistance, not only we are going to place our stops above the previous high, but we are going to place it above the previous area of resistance. Now, if this is too wide of a stop for you, then you should not take the trade. Okay? Because, well, this is a 57 pip stop loss, and to me that is not wide at all. A wide stop loss would be 100 pips plus. And remember that you are risking always a fixed amount of your equity. For example, myself, I always trade with a 1% risk on my equity. This means that what is going to change on my trades is my position size. You can see that on the GBPUSD, I took a 3.85 sell position, and on the US dollar Canadian dollar, I took a 2.20, always risking 1%. I know that in the case of the GBPUSD, I didn't take a stop loss, or I didn't put a stop loss, but this was only because of this flashcards. Now, let's go back to the GBPUSD. If you put your stops above the previous high, that is, well, it is correct to put it above the previous high, because if price goes up and makes a new high, well, this would mean that we are still in an up move. But what if price just wants to test the overall area of resistance around these levels? Well, that would mean that we'd have placed our stop losses below the area of resistance that price could be aiming at, and that would mean that we would be taken out on a loss, even if price just tests this area and then continues to the downside. So the logical place is to place it not only above the previous high, but above the area of resistance.